Hey guys, Akil here. Welcome back to another trading video, sharing with you some more of my ideas. I've been here a lot lately, but what can you say? I love trading. I work with a lot of traders on a regular basis, and they and myself come up with a lot of good ideas, and I want to share them with you guys. Today's idea is going to be very similar to the Euro-Yen idea that we had, a few weeks ago that ended up pretty well, right? 350 plus pips. Not saying this is going to be the same, but this is very similar. And of course, you can go back and watch that video. We looked at it multiple times if you want some details on that. We're going to be on the pound yen today, and let's start with our normal, boring four-step IPDE process. Identify, predict, decide, execute. Where is price action currently trading at? If I put out a horizontal line, look left, structure leaves clues. We are trading at a previous level of structure resistance. Now, despite there being a lot of positive qualities here, and you'll see that as we go down to a lower time frame, I'm not too interested in this trade as far as looking for a short. And the reason is I don't really see a path to where price action can go, meaning that if I'm looking for targets to the downside, there's really not a level I'm interested in. The first level that I'd be concerned about is right here, which we're already trading at. If I'm a little bit more aggressive, maybe right here. But all in all, it's a good location, but there's just not a lot of room for me to take profits. So what I'm gonna do is I'm gonna look forward and ask myself the question, okay, well, if price can end up violating this level to the upside, then where can we go? And just like we did on the Euro Yen, we can see that there is a lot of room to the upside to go. I'll draw it a big box and we can revisit this in the future and get more detailed about it. But between myself and the live room members this morning, we pretty much marked off a zone between, now this is the pound yen, just take that into account when I say that, 202 and about 204 quarter, right? So, just a 225 pip zone, but this is the pound yen. This thing moves a lot. And again, we'll come back and get into more details about this later. We do have some fib confluence and some harmonic moves up there as well, but that's for another video. So let's go down to a lower time frame. We're gonna go down to a 4 hour, and I just wanna build a case for entry for the short opportunity, even though I'm not interested in the short, just because I think it's pretty cool, right? We have a few things happening here. One, we have a one-to-one measured move, an AB equals CD pattern, right? Boom, right at that level. Two, if I take on my Fibonacci extension tool from the swing low to the swing high, that A to B move, we have a nice 1618 Fibonacci extension. And three, I didn't do this morning, but it looks like we have a 127 from this previous move as well. How good am I? I am oh no, I'm not too good. Okay, so we don't have confluence there, so it looked like it, but we didn't. Regardless, it's no surprise that we're seeing some relief at this area. We have RSI overbought. We have previous structure looking left. We have AB equals CD pattern. We have Fibonacci confluence. So if this were a CTS score, combined technical score, we would have a score of 1, 2, 3, 4, 5, 6, which puts us in the realm of good trade. Again, the problem that I had with this isn't the opportunity to trade, rather just where am I going to take profits? And I don't really have a level of interest aside from this zone right here. Now, speaking of that zone right there, as that would be my profit target place if I were looking to get short, that is also a place you can look for if you're interested in getting long. Now, this is a risky move. And what I'm going to do is I'm going to give you a conservative approach and a risky approach, right? So pretty much, and just real quick lesson, think like the other trader. There's no such thing as bullish analysis, bearish analysis. There is just technical analysis. The only difference is how you use it. You can see in a case right here, the analysis that we did to project where we would look to take targets at if we were selling is the same place you can, same type of analysis and same place that you can use to predict where you want to get involved if you were buying and vice versa. So as far as what we have here is we have a previous level of structure looking left. We also have some really nice rejection candles right here, right? These little tweezer bottom type candles where we can see that the bulls or the sellers pushed down and then they got rejected. And then vice versa, what we had right before that was the same thing in the opposite direction. We had the buyers push up and get rejected. These are all clues that say this is probably an important level and this is the area in which the market is going to have a think. So why is this important? Well, if you are someone that wants to get in this potential move early, this is the area I would pay attention to. A hold at this level, again, predictive in our analysis, reactive in our execution, and then an opportunity for price to push up and extend to that long extension point that we drew in earlier. Now, again, why is this risky? Well, because we don't have confluence yet. Remember that IPDE process, identify, predict, decide, execute. Remember the video from yesterday on the pound dollar, and which ended up getting rejected and holding, so we couldn't do that trade. On the higher time frame, or even on this time frame, we yet to have a break and close above structure. So we don't have confirmation that price is more likely to move in that direction, the bullish direction, than not, until we get that confirmation of the higher high, higher close. So an aggressive way would be entering here and putting yourself in position to get long. A more conservative way would be waiting for price action to put in a higher high, higher close, then wait for, you can trade on the breakout or wait for the pullback, and then look to get involved on that pullback looking in the same direction up. Now, if you want to blend the two together, here is one approach that you could think as my brain starts spinning. If the opportunity serves itself, meaning you'd have to get a really good entry, but if you get a really good entry, even perhaps on a lower time frame, and you want to be aggressive at this level, one thing you could do is do something very similar to what we did with the Euro Yen trade, where we have a small conservative target, so a TGT1 right there, take a partial position off just at a retest of the highs, and then hold on to that second half of your position for the big move. And that gives you a little bit of best of both worlds. You are conservative in getting your money off the table, getting your risk to break even, yet you still have some exposure to the bigger move if it were to happen, but not full exposure because you don't yet have the confirmation. So many different ways, I wouldn't say to skin a cat, but that's an awful analogy, many different ways to approach this trade. If you're someone that's looking at this, let me know which way you are thinking, right? Put it in the comment section below. Are you thinking buy right here for the big move? Are you thinking buy right here and split it partially, meaning conservative target and then leave a little bit on for the potential home run? Or are you thinking, hey, break and close above and then retest? Doesn't matter if this is actually in your plan or not, but put yourself in the position of a trader who may be looking at this and start thinking about and sharing what you think you may want to do in this situation. It's a really good practice and something that can definitely help you in the future of your trading by making these predictions and really trying to figure out what type of trader you are. Of course, leave any other comments or questions below. I answer them all, and I will see you guys next time I do a video.